tax planning strategies can affect your wealth. So, of course, if it affects your wealth, it can certainly affect the wealth of your heirs. So there's a lot to unpack here. So let's go. The first thought is, let's say you're making $100,000 and you have to pay 40% of taxes. That's not the tax rate. I'm giving you an example. Okay. Then now you have to live off the 60 that's left. But imagine if you're making $100,000 and you only have to pay 10,000 in taxes. What do you do with that additional 30,000, 30% of that of your potential income? Now you can invest those dollars. You can put those in place. You can think about paying for your education or education for your children or even grandchildren by doing that. All of these things affect your wealth and the wealth of your heirs. Making sure that you have certainly your estate planning in order is going to be a huge part of affecting the wealth of your heirs. What happens if they're not quite ready yet to receive the wealth that you've been blessed to receive? Then, having a trust in place can certainly have some guide rails, so to speak, to really help them and assist them in making sure that this is sustainable, even possibly beyond their lives. So thinking about taxes, which in many cases, especially if we look at the top 10%, 5%, 1% of Americans, you'll find that that can be your actual largest liability. And planning for that and to take advantage of what the IRS and the loopholes are in there make a tremendous difference.